The morning report for the 20th of May 2011. Our markets rallied strongly yesterday. All Ords and the ASX 200 up 1.3%. This puts the All Ords back at 4,828 points. It's still below the 5,000 it was during April, but it certainly was a good rally. Now, the rally was in the back of the US market mainly, and the Federal Reserve over there's minutes showing that central banks are not in any hurry to tighten monetary policy. This obviously flowed through to the US markets last night as well, and we saw them at 0.6 for the Dow Jones, 0.88 for the S&P 500, and 1.1% for the Nasdaq. Now, the Dow Jones is closing at 12,560. Now, this is a good sign for the US market, and certainly for the US market recovery. When the interest rates stay low, obviously lending is still cheap and people will get back to business as usual, as opposed to Australia at present, where we see a bit of inflation coming through, the Reserve Bank struggling not to raise interest rates, and certainly the banks are pegging an interest rate rise next month in June. This will push our economy and slow it down a little bit. Obviously, what we're going to see is more funds flowing into Australia to invest in our higher interest rates. This is pushing the dollar up, which is sitting around 1.065 at present, and that's going to cause havoc with the mining companies and any export companies. Mainly the mining companies will be affected there over the coming year. So it's a bit of a conundrum at present. The US market is recovering, but we've got some problems here at home regarding the economy itself on a broader basis. So this will probably keep our market within the trading range we've been looking at for the last 9 months or so. And I think, again, on the dips, we pick up some quality with yields, and on the highs, we either look to hold or sell off some of the speculative or short-term stocks like the energy or material stocks, which don't pay much dividend yields. For more information, go to our website at growyourwealth.com.au.